have some things in the market that are moving quite a lot right now. So it's always exciting when we've had some market movement and some things to come, especially in August. Um, I'm just going to jump straight into things today because we do have a lot to cover. Um, let's just dive right in, and we're going to start off. If you guys are brand new here, you've never been in this presentation before, let me tell you who I am, just so you kind of have an understanding who I am and where my opinions and things come from. I look at charts a little bit differently. I'm not an indicator-based trader. I'm what's called a price action trader. So I'm reading candlestick formations. I am looking at really how things react off different price levels, and it's a little bit different. If you're not accustomed to it, it may seem a little strange. About as complicated as I get is I draw some boxes from left to right. So it's pretty interesting. Um, First things first, I've been trading since about the end of like 2000, 2001 time period. So if you think back to the tech bubble, I've gotten to trade and had the opportunity to learn in a lot of different market situations. Booms, bubbles, busts, crashes, recessions, you know, the longest bull market ever. I mean, a lot of different environments. And I started off like most retail traders. Like my dad, he was not a trader. He was not a floor trader. So I did this from a purely original kind of retail trader mindset, right? I got books. There wasn't YouTube back in the day. I learned how to make all the mistakes in the world, and I learned what not to do more than anything else when I first started. Uh, Ended up starting where everybody else does. Stocks, traditional options. Learned a lot of those strategies. Absolutely loved them. Realized very, very fast that I loved the idea of leverage. Okay. After about 6 years of kind of stumbling, trying to work, trying to do everything at the same time, learning the trade, I found the foreign currency market and really fell in love with that market because it applied leverage, but then also a 24-hour market because I could do it after I got home from work and all the other kind of factors out there. But I just absolutely loved it. Ended up loving it so much, I ended up becoming a financial advisor because I wanted to see what it was like on the inside. Now, you may say, why are you telling me this, Brian? Here's the thing, guys. Being on the inside, I was able to see kind of what do banks and institutions and hedge funds and how do they look at the market and how do they look at what retail traders are doing? Because again, at the end of the day, the retail trader is the small fish in the pond, and those are the big ones. I learned very, very fast that I was 100% wrong in what the inside, the banks, the institutions, what those people, what they tell us is not really what they what they mean, right? We intercepted wrong. So I learned very, very quick. I didn't want to be there, and my passion was in teaching. So I left that industry, came back out, spent about 6 years traveling around the United States and Canada, teaching people how to trade the markets. Created a number of different trading courses as well at this point, different strategies, and I kind of pride myself on building kind of customized programs for people. The 30-minute trader was for people that have full-time jobs. Obviously, the 5-minute binary course is something that for people that have very limited time, how to get in there and still trade with Nadex. Um, there's a high volatility course, basically how to deal with COVID and really news in general, the parabolic retracement you may have heard. But again, I love getting in there and talking strategy. So a lot of the things that you will see in the next couple slides, you'll see my mentality. And that mentality is keep things as basic as you can because if you overcomplicate it, that's where you're going to cause errors. All right. So with that said, let's dive into the risk disclaimer. Trading on Nadex involves risk and may not be appropriate for all investors. Trading can be volatile and investors risk losing obviously, investors risk losing the cost to enter their transaction, including fees. The information presented within this presentation is for informational and education purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results, and Nadex contracts are based on underlying asset classes, including forex, stock index futures, and commodity futures. And we will cover all three of those today. Now, Nadex is a registered trademark of the IG Group. Here's our agenda for today. As you guys know, first things first, I'm going to start off with the upcoming news events for the week. If you guys have ever heard me speak, again, I do talk fast, and if I'm talking too fast for you, again, I get pretty excited about this stuff. But what I get most excited about is news. I absolutely love news trading, so I'm going to make sure that I cover that and give you guys opportunities this week of when it's a good time to be in front of your computer, looking for potential opportunities. Then we'll dive into indices, then we'll jump into forex, and then we will cover commodities. Commodities, I will cover gold, silver, which really until the last couple weeks hasn't been a big one that many people have been following, and I'll also cover oil. Okay. And again, if there's any opportunities today, remember that you guys are trading at your own risk. Nothing I'm giving you is a recommendation or anything like that. I'm just giving you my opinions and my analysis. Okay. So let's go across. I'm going to drag a window in. You guys know that I use a couple different websites. Forex Factory is one I use a lot because I really enjoy the scanner that we have at the top. It's a quick way to learn really what's moving right now and where the potential opportunity is presenting itself. So right now, again, if you're not a currencies trader, it may not make a whole lot of sense, but I'm looking at this top scanner and saying, hey, in the last 24 hours, the pound dollar's moved 126 pips. That's above its daily ATR. Now, if you've ever heard any of my other presentations, you guys know that I truly believe that ATR is the most underutilized indicator that exists, especially for Nadex trading. Okay, if you guys are here and you're not using ATR, you're definitely missing out. Okay, but this is a big telltale sign that there are opportunities in the pound, ripe for the picking. Right, it's like vine ripened tomatoes. Now, your dollar moving 60 is not bad. The pound yen over here at 65 is showing me that, man, there is a very big imbalance right now between the pound dollar. And again, seeing this, I can tell that, hey, listen, we have dollar weakness here, dollar weakness here, dollar weakness here, dollar weakness here, little bit of dollar weakness here. And again, this is in the overall market. We're seeing some pound strength come back in. Again, seeing the euro pull down. So again, it looks like pound is on a mission today, and the dollar is just retreating. So good to know. So today, there's really no news impact. It's going to be purely led by meetings. By media news. But going into the rest of the week, tomorrow is a very important day, particularly for commodities traders. Now, this crude oil inventory number is one to watch. Okay? A lot of you out there may not even trade commodities or know that, again, if you're new to Nadex, if you look on the bottom side, you'll see commodities, and there's a couple different ways to trade them. Oil is embedded in there, and in my opinion, if you're new to trading oil, it's the best way to do it. Now, this is why I'm pretty excited about this, but look at what the forecasted amount has been versus the actual for the last 3 weeks. They've been off by tons and tons and tons, and oil prices are not spiking. That's really cool to me because, again, if we have something in the other direction, say we have something like this, we could potentially have a tumbling oil market. And again, ripe for opportunity. We'll do the analysis today, although a lot of it will have to come in the overnight. But I'll kind of explain that when we get there. As well as we have OPEC meetings tomorrow. And you guys remember before, what did OPEC do before when the coronavirus kind of started? They started doing cutbacks with Russia. They were trying to stabilize the price of oil. And the problem is we just kept getting more supply and more supply and more supply. Now, it's very interesting to me right now that OPEC is still considered a large kind of high impact move. The reason why is OPEC doesn't carry around the same power it used to, but the absence of headlines tomorrow, something that OPEC says could play on the fear of greed of oil traders and give us some short kind of intraday movements. I think right now really what is dictating the price of oil and where it's going, and this is my opinion, is really what the recovery is looking like going forward with COVID, right? If more and more people are going to be staying at home and being remote workers, there is going to be an overall less demand for oil. And they can try to kind of tweak that. But again, there's only so much they can do to stabilize price when demand isn't there. Because at the end of the day, demand is what really drives that price, not them tweaking some numbers and turning pumps off and things like that. So, I think that's really where the main focus is going to be is recovery. And again, even after we get a vaccine, are people still going to go back to work when companies say, hey, listen, this person can be productive from home and I don't have to pay the cost of their desks, phones, everything else here. Maybe it's worth them staying remote if it raises their level of happiness. So you never know. So that's what we got tomorrow. And again, watch out for FOMC meeting notes tomorrow at 2 p.m. They're always worth a bang. They'll mention recovery, stimulus. It could definitely, kind of mess the indices up, whatever the trajectory is for the day, if it's moving, right? Thursday morning, first thing, we have the unemployment claims number. Now, I'm sure, without a doubt, last week you heard all the media attention with the fact that we finally broke 1 million. We were down to 963,000. Now, there's a couple ways to look at that for these unemployment claims. Continuing was also down, okay? Now, the number itself is kind of one of those things you got to take with a grain of salt. The reason why some of the continuous claims have fallen is because people have run out of the amount of weeks they were allowed to have for unemployment. Okay, there hasn't been extensions granted and things. So the number in itself needs to be taken with a grain of salt, but it's not so much the number that matters, but it's the media perception and what the retail trader sees. If people feel, hey, listen, we're coming out of this coronavirus thing, right? Less people are unemployed. We're hiring more people back. We're good. Let's get back into the markets. That will help surge consumer confidence. It doesn't mean that we're technically any farther ahead, but vice versa. If we start hearing more things close down and this number goes back over a million, again, that's going to drive some more fear back into the market. And again, fear in the market will, obviously make it a little bit more volatile, right? Now, again, Thursday, not a bad day. Friday is the day that there is a ton of news releases. Now, a lot of it is European-based news. So if you are a currency trader, there's a lot of opportunity Friday morning. Now, if you've never traded currencies ever, you've never looked at it, it may not be the best day for you to jump in there and say, hey, I'm going to trade currencies today. But if you have looked at it in the past and you are confident in being able to place trades and control your risk, this the flash services and flash manufacturing PMI numbers are pretty important. Why? Right now, we can see that the pound is on fire. And although the euro is showing a little bit of strength, at least versus the dollar, it is definitely weaker than the pound. So it's kind of in a volatile situation, right? Well, here's all the European data, and we don't really get European data too often. There's a ton of it on Friday. And again, it's really early morning. That's what currency trader life is about. But starting at 8:30, we jump into Canadian news. And again, retail sales, extremely important. Look at this. Retail sales is supposed to be up 24.7% month over month, showing that Canada is just going for gangbusters, right? As well as we have a U.S. flash manufacturing number. Now, last time we were pretty close to 50. You guys don't know what this number means. You don't have to be an economist to understand it, but above 50 is good. Below 50 shows that we have contraction in the economy. So if this does go below, media may take this and swirl this a little bit and kind of ruin our Friday afternoon. So again, just something to keep on our radar, all right? So again, not as many news releases this week, but some of these are some pretty big hitters, and again, provide great opportunity. All right, great opportunity. My two favorite days are probably Wednesday and Thursday this week. Friday morning's a bit early, and again, I'll trade those. One thing, again, this is kind of a hidden gem. Okay, if any of you have heard me speak before, or you've asked me what my favorite time of day to trade is, it's easy. I have something that I consider the golden hour. And it's basically between like 9:30 and 10:30 in the morning, that kind of first hour of the open. Really, 10 to 10:30. If I had to dial it down to like the best half hour ever, it's between 10 and 10:30. Okay. Well, there's a news release, the CB leading index. This is typically a positive time to be looking at markets because you see a lot of kind of reversals in the market at this time. So if I had to pick one, I think that's probably going to be my favorite for this week and one that I'm definitely going to make sure that I'm around for. All right. So with that said, let's jump over into the charts, okay? First things first, let's start with the indices. So the NQ. So we had a level sitting up here around 11,263. Now, many of you now have been on week after week, and there's that specific trade that I keep mentioning, right, guys? It rhymes with HP, right? The Harry Potter trade, right? That continuation trade. Well, here is yet another example of that Harry Potter trade setup. We had a zone on the 30-minute, and I mentioned last week, if you remember, listen, we are waiting for talk of, for kind of the release of stimulus, right? Stimulus will drive this market higher. We need to be very careful in any type of shorts. And again, we had to make sure that our timing was correct on any type of shorts, but we were looking for longs. And again, we had a short opportunity that came in, right? Well, I left this on here and I didn't move it on purpose because, again, I wanted you guys to see this setup because it keeps happening again and again and again, okay? So I'm going to take this, I'm going to move it across, and it was right here, okay? Now, I love the fact that it's a live example. We've literally hit it in the last day, okay? Remember, the Harry Potter trade is eventually, right, when we have an area of sellers, it can only be hit so many times before we run out of sellers and the area is broken. And again, we hit here, got forced away. This was not the first, and then this was another one, and then it kind of stabilized right below. And this is a big telltale sign that, hey, listen, these are the types of situations where this thing pushes higher. But remember, risk is the most important thing when we are trading, okay? The Harry Potter trade is a continuation. It's a breakthrough, pullback, explosion forward, right? It's a breakthrough, a pullback, and then a surge forward. And that's exactly what we saw here. So I'm going to move this across so you guys can, we'll just get this out of the way here. But here's what we had in the NQ. We're kind of in the same situation now, and that's why I'm showing you. But again, you guys know that I'm very big on risk to reward ratios. There's your 1 to 3 risk to reward ratio, and check that out, right? We came through, we got our white space below, we pulled back, we hit, and then we shot higher, and we're sitting right there now. So the reason why I'm telling you this is now that we're back up into this kind of this high range again, we are kind of looking for somewhat of a similar pattern. We are looking for price to kind of go up and falter and give us a zone for entry, but we're using that zone most likely for a breakout higher. Now, is the economy fixed? Are we in a great situation? No. But there's enough positive factors out there about coming in and saving companies and giving people, sending people checks and disposable income and again, all these things that could definitely drive, the retail spender out there. That's why we're seeing these things punch higher, right? So we're looking for the same type of opportunity. And this one actually gave us two different entries, right? Here was your first entry that popped up and hit target. Then it fell very, very fast down with news this morning, hit, and then popped back up again, right back to the same area. Okay. Now, if you guys remember me telling you just a few seconds ago, what is my favorite time in the morning to trade? What half-hour window? Between 10 and 10:30, right? I don't know if you guys can see it. It's down here. It's a little bit hard to read. If you guys, I wish I could make it bigger text-wise, but I can't. I don't know if you guys can see this, but look on your charts. What time did this give us that reentry? Here's the red one is the 10 o'clock candle. The green one is the 10:30. So do you guys understand why I love that time frame so much? Look at all this positive, 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 positive. Market opens, it tanks, tags an area. We're looking for buyers to come back in again. At the reversal time, boom, right back up to the profit target. So again, just another example, guys, why 10 to 10:30 is so important. So right now, I am looking for a new high in this one. I'm looking for basing, and then I am looking for a failure to go higher, right? We're looking for a pullback that doesn't go as deep. Now, if we do get that failure to go over, I'm looking for this exact setup in a long trade to go north, right? Don't have it right now, but we're looking for kind of the same thing where we have a level, again, kind of something like this, where we're looking for it to punch through the top of a level like this, a pullback, punch through, pull back and test that level, and punch higher, okay? And again, most likely later this week. S&P. So S&P is a little bit choppier. I'm going to go out on a higher time frame. So here's the problem that we've had with the S&P. So one of the things that I talk about a lot as well is talking about where we are on the curve. I'm a very, very, very big believer in statistics. I am a believer in reversion to the mean. Okay. We are very high on the curve. I am naturally going to be bearish this position. We are not at all-time highs. We are close, right? You know, we're close. It's right there, but it's not up in the kind of touched territory yet, right? So we're sitting in, you can see it here, but it's a little bit busy. But on this 1 hour chart, you can see that there's a dotted line basically from here to here, right? I don't know if you can see it from here or not, but it goes all the way across from here to here. That is a 4 hour level, and it's a level that we've been kind of banging off of. Okay, we've hit it here. We've got front run here. We've hit it, hit it, hit it, hit it, hit it, hit it. Now we are pushing deeper in there. And this is a level that I'm kind of watching and looking for a clean break through the top side. It does kind of match up with what we see in the NQ, but I'm waiting for price just to punch a bit higher and then come back down again and look for a long position. Now, if we don't get anything like stimulus and the NQ starts to turn and people start to get negative with things, basically what I'm looking for is some type of kind of rollover in here. Now, is it going to be the cleanest entry? Probably not. Of the two, I think the NQ will give us a little bit better of an entry, but I feel like the way that the S&P is set up right now, I feel like it's kind of exhausted itself to the top side. I mean, it's been punching, and we're starting to see kind of lower highs come back in again. So I would have to say right now, the only thing on my radar for the S&P is, you guys can see down here, I have kind of a break of a lower level, right? It's kind of a break of this level down in here. Actually, I guess it was on a 30-minute. Yeah, you can see it right there with the green. What I'm looking for is a Harry Potter trade, but instead of going higher, I'm waiting for it to come lower. Okay, it's an area that we've seen very, very deep basing in. Prices pulled back to it. If we come back down here again, I don't know if this level is going to hold again. And I'm not trying to guess. I'm not using a crystal ball. But what I'm saying is, if I'm looking to get short and it hits this level and bounces, no harm, no foul. I didn't get into the trade. What I'm looking for is a clean break of around 3350-ish area. I'm looking for it to pull under, give us white space, pull back up, tag this level, and I'm looking for a 1 to 3 drop over here. I love the way that these candles just kind of spiked up and there's no resistance in there. So that's kind of the trade setup. It's going to be one of those ones that I'm going to hold it. It's going to be patient. It's probably going to hit sometime later on, probably sometime later on this week, right? Really any type of negativity, and there's a lot of stuff out there that they could say negative that will start to roll this one back over. Okay, but kind of holding that one. The Dow, as you can see, the Dow is even lower, right? Even lower on the curve than where the S&P was. The S&P is here where the NQ is up top. So we've had a level that's marked here. I don't know if you guys can see it. This kind of, I'll box the top and bottom off so you can see it. Again, the blue line is what we're looking for. there's a level here that I was waiting for it to kind of hit and potentially look for reversals. And as you can see, there's the blue, there's the teal line. That's the area we're kind of stuck in right now. Now, on the lower time frame, this is a level that we've been talking about now for a bit, right? We've talked about the 28,074 and the 27,683. Now, the 27,683 hit last week. We had talked about it back in this area here. Well, price came down, it tagged it, and went back up. And as you guys can see, here's the top of the box here. And you can see what we had this morning. All right. And again, what time in the morning did we hit this bounce? When did we have this collapse into this great buying zone that's been tested here, 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 and here? 10 o'clock. 10 o'clock. So again, great little opportunity off of that. Now, where we are right now, again, I don't think it's going to have an easy time getting back up again. On a smaller kind of time frame, I'll take this blue and this blue out right now because I don't need them for this discussion. Small areas I'm looking for is kind of, this is a little hidden zone right here on the 30-minute. It's an area where we can see the wicks coming down. So that's kind of a minor level I'm looking to take shorts off of. And again, a lot of this depends on the time, right? And that's around 27,780. Again, I think the 28,074, if we can rally back up over there, I think that could be a potential entry with any type of burst forward tomorrow night. I'm sorry, tomorrow, like kind of morning time frame or for FOMC. Now, going long again out of this bottom area, that's a little bit riskier in my opinion. And the reason why is because we've already kind of hit it a few times here. We hit it here and we hit it here. And every time it hits this zone, we're going to have less and less and less orders sitting in that zone. So what I'm probably going to do the next hit is I'm going to wait for some type of a confirmation kind of bounce off of it. Like see how this one kind of hit, and then started to take off? I'm kind of looking for a hit, a pullback, and then a hit, and then goes higher is really kind of, I think, the best way to play it. Now, is it possible that it's going to come down, stabilize, and start breaking? Yeah, it's definitely possible because, like I said, there's only so many buyers willing to step in at this price level. They can only fight this downward pressure so long. And if the NQ, the S&P both roll over, I feel that the Dow is going to be of the three. As soon as the sentiment turns negative, I feel like the Dow is the first one to roll. So I'd love for it to pull back to a clean area. I mean, heck, I would love right now if it forms a base right here and then slowly starts ticking. That would give me another potential area to get short in tomorrow for news. But, at this point, it's 12:30 in the afternoon. I expect there to be one more spike and then probably an end of the day kind of craziness, right, in that last 15 minutes of the market. Right now, I would say, yeah, we got to hold both these sides. And again, I like the morning trades better. My favorite trade has already happened for the day on this one. But again, keep it on your radar. And again, even maybe tomorrow, we may even see this zone. Okay, so 27,974 could be a short, 27,870 could be a short, and then again, I love the level up here at 28,074. All right. Oops, hold on, I missed it. If you guys asked a question, I apologize, I missed it. Can't see anything. What time zone are you referring to when you're speaking of the 10? Okay, Hero Eastern. Whenever I talk about anything, I live in Maryland, so I'm always talking about Eastern. I know some people in the middle, like in Chicago, feel that their time zone is the most important, but no, New York is the time zone that most people talk about. So yeah, I'm an Eastern guy. I make fun of the Central people. If you're Central, I apologize, but my time zone's more important. Yeah, it's okay. The time frames are going to be in the back. Whoops, I moved something. Yeah, that's why I kind of have the watermark in the back. But most of my charts right now for today, William, are all going to be set on 30-minute charts. Okay, that tends to be the one I use the most. But yeah, 30 minutes is in the background. You guys should be able to see it. All right, so let's switch across to the Aussie. Okay. The Aussie has had some amazing movement today. We've seen this drive forward, and if you guys know what the Aussie is a proxy for gold, right? I don't know how many of you trade gold out here, but the Aussie is a proxy for gold. Now, the move we've seen this morning thus far has pushed us straight up. We ended up hitting a level, and again, I'm going to switch time frames typically when we see these large bounces. And you can see that price drove up into the 72.47. Now, this is a level that we talked about last week. It is a higher... It's actually a daily zone. It is a higher time frame zone than what I use during my intraday trading, but it's something that you need to pay attention to. Even if you're not trading off of it on a regular basis, it's something you need to be aware of. So I was looking for some type of a big push, and you can see here on the hourly, we ended up getting that push, and we went right into that zone. Let me click this, and you can see that this is where the zone starts. Again, gray on the red. Maybe I'll change this to a different color so you guys can see it one day. But this is where that zone started. So looking for a pullback, looking for an entry. And again, this comes back into kind of the same thing with timing, right? When did this spike occur? This started all in the overnight. It was going higher, higher, and higher. But where was the reversal? When did this reversal happen? 10 o'clock in the morning, right? This green one is the 9:30 candle. This is the 10 o'clock candle today. And that's what led us back down again. And what did it do? It bounced off the perfect area to take your profit. Okay, so did I expect it that would happen in one candle? No, I didn't expect one candle to move that far. For those of you that do track this, that's 40 pips in one candle. All right. Now, why am I talking about the pips? If you guys don't know about currency trading, you guys heard me mention before that I created classes on the 30-minute trader and the 5-minute binary courses. One of the things that I follow a lot is the strike differential. And if you guys remember, I gave you guys homework last week or the week before to go out there and start looking at the strike differentials. Okay. Here's your homework today. Okay. And you guys, if you know what it is, you're more than welcome to type it in the chat for everybody to see, but everybody should go look at this, right? I want you to log into your Nadex platform. I want you to go look at what the 2-hour binary strike differential is for the Aussie dollar. I don't care if you're a commodities trader or you're just an indices trader, you know nothing of currencies. I want you to go in there right now. I want you to find the Aussie dollar 2-hour binary and tell me, type it in the chat, what the strike differential is. Because from 10 o'clock to 10:30, this was a 42 pip movement. How many strike prices did that move inside of that 30-minute window? And this is why I love the 10 o'clock window so much in the morning, at 10:30 Eastern Standard Time. Hero. All right. Love the pullback. Love the setup. I think this was a great opportunity today. Right now, I'd kind of see it basing sideways. This is going to be one to watch tomorrow. If you guys are not sure how to play FOMC notes, gold and the Aussie dollar are going to be great ones to play because they're going to kind of roll together. All right. Any analysis on it I do right now, though, will have to be kind of rolled into kind of tomorrow because, again, we got to see what happens in the overnight. How is the market going to prepare for it ahead of time? But like I said, I think hourly, we got to be thinking if price stays up here for the Aussie dollar, again, this is an hourly chart. There's got to be some type of rollover. I mean, again, price has been turned away. If we stabilize and push back up, again, all good things for being able to take some type of an Aussie dollar short. Okay. Now, Aussie yen is another one that we can trade. Now, Aussie yen, same thing. We had set this up last week as well, and we talked about, hey, listen, if we keep hitting this, it may be worth one more hit depending on how the entry is. And what happened was we stopped right here. We didn't quite make it there, right? But what we did is we ended up having a gap, and we rolled into this weekend in the same zone in a basing level that gave us another entry off of the same level we talked about last week, the 76.58. And what did it do? It drove all the way down through its 1 to 3, all the way down through its 1 to 5, and almost gave us another entry today, but it didn't. It got front run, unfortunately. There are ways to kind of get into that one sooner. And again, you guys know what time this one did. It's reversing, right? This down push reversed over here at 10 o'clock in the morning. So what I'm looking for right now in the Aussie, I'm going to bring this up to a 60-minute to give us kind of a better look. And I'm going to delete this to just kind of clean it up a little. You know what? I don't want to delete all those. That one there. Here. That off, and I'll delete that one. So we know that we still have this zone up top here, right? We know that zone is still here. So we're going to kind of keep an eye on that one. With price grinding down at this point, what I'm kind of looking for the Aussie to do is I'm looking for it to kind of keep pushing down. There you go, Ross. So Ross typed it inside of questions, guys, not inside of chat. But let me see. Do I have chat up? Let me see. I can pull chat up. I don't see anybody typing in the chat, but it could just be because I didn't have the chat window up. But Ross did his homework. Okay, so Ross, answer me this question. If there is a 4 pip strike width on the Aussie dollar on the 2-hour charts and it moved 42 pips, how many strike prices did it move down? It's simple math, guys. It's 10. Do you think there's opportunity? And again, whether you're an in-the-money trader, an out-of-the-money trader, and at-the-money trader, if something moves 10 strike prices down, is there opportunity there that you guys may not have seen before? Yeah, you guys can answer the question for yourself. It's a rhetorical statement. There's a lot of opportunity there. And again, that's why I love looking at these smaller time frames. Okay. All right, so in this one, what I'm looking for is if price comes down to 76.00, I am looking for some type of a potential reversal. The NZD last week made comments, New Zealand, about how they want to have a weak New Zealand dollar because, again, for tourism, it helps their tourism for them to have it weaker. Again, the Aussie is going to be somewhat in the same boat. And it's been on such a drive because of gold. I feel like the Aussie is also ripe for some type of a short. But you will have pullbacks. And at this point, if we bounce down, we've had great price action off this level. I think 76.00 is a time that we definitely want to be watching out for. Okay? Look for longs off of that. Now, Euro Yen. Euro Yen, we mentioned that we had a green zone here last week and we're looking for a break. Unfortunately, with this one, this one just moved way too fast. It didn't give us the pullback on entries. This one made it a little bit more difficult. But we had marked this, we'd marked this zone, and again, that was for my guys. And we said we're looking for somewhat of a retracement. Now, it went about 60% of the way through before running into something. A little bit more difficult of a trade. It didn't really give us a clean entry, and that's what happens. Now, this is also an hourly chart, and one of the things we mentioned last week is we were high on the curve, and we were kind of sitting close. Now, let me reset the time. Last week, we were the 11th, right? The 11th was right here. What we had said is if we were able to get up to this zone, we had to be thinking about shorts. Okay, we were sitting right here last week. Well, we did. We ended up getting a push over the next few days. We hit that zone, and we have been bouncing and kind of retracing back down again. So I guess I didn't draw this for you. This must have been with my guys, and we were here. But the zone hasn't moved for me. The zone has been there for a couple weeks at this point. So again, we did hit that zone. We haven't gotten the full retracement. It still needs to push a little bit farther. This is a yen play. This is purely a yen play. Now, what I'm worried about with this one, again, I would urge a little bit of caution. Obviously, we have the euro and the pound, and this Friday we have a lot of European news. But we can't look past tomorrow. FOMC has the power to move the U.S. indices a lot, and the yen is basically a proxy for the Dow. So I'm expecting, again, the way that this looks, it looks like it wants to find some more sellers and kind of push back lower. I would say, again, this is not a tradable, an action, but I would say, I could see price coming back down to that 125 area. Depending on when we get down there, again, it may be an actual long opportunity because if whatever news the FOMC says going into tomorrow is enough that it's going to really affect the yen and really give us yen weakness, I can see the euro taking a bounce and coming back up into this 126.37 range. So it's kind of another area that if we do get a push higher, again, I'd be looking, kind of get more bearish focused on this one, a little bit more bearish centric. And it kind of, it's kind of what we see here, like the yen, if this comes up a bit higher, again, have it roll. This one, same thing, push a little bit higher, roll. And even the pound yen. The pound yen is not in the same place, but again, if we push a bit higher, it's kind of the same idea. So I jump pairs, we're on the pound yen, but kind of the same thinking. The euro yen, it's kind of a wait and see, but I'd like 125 to get hit, and then I'd be interested in reversing. In the case here, you guys can see, I had marked off 138.73, and that's kind of the area we turned and bounced off of. Where we are now, I am actually a bit more bearish kind of minded with the pound yen as well. Now, the pound yen has the power to move, okay? It has been somewhat consolidating. Now, again, this may make no sense for some of you guys out there, but this big collapse right here, this big spike, this is the ATR, right? The average true range. The ATR is getting very, very small, okay? Back here earlier in the month, we were in like 90, right? We were getting very, very low movement. At its peak, right? At its peak, we had 375 pips worth of movement on average per day. Now we're at 110, right? And actually last week we were averaging down here at 90. So the pound has been really running out of steam in a lot of cases. Now, obviously we are more high on the curve than anything else. Looking on an hourly, you can see that we've now pulled up. We had a very big, large movement today, right? I mean, a lot of powerful movement straight up. This is all today, right? Impulse correction, impulse driving forward. We almost made it back to this kind of short area, but I'm kind of looking at this one rolling and flipping as well. It's just moved way too much in one day to be able to maintain its trajectory higher. Ideally, I would love it to be up here to take the short, but it doesn't mean I'm against some type of a short over in here. And again, depending on what time it hits and things like that. Again, you guys know I love those morning trade setups. I love the bounces off of them. This could be some interesting move. Now, there is also pound data. This is definitely going to be a mover on Friday as well. So if you guys do get up early to trade some of those flash manufacturing numbers, the pound yen is a great way to play that pound number. Pound dollar is good. pound yen is even better to play it. Okay, but right now I'd have to say I'm a bit more bearish focused, looking for probably entries of a break of probably this level here. But again, I'm gonna wait till U.S. traders come back online in a half hour. Now, pound dollar. Pound dollar has been on a tear. I don't know if you guys can see it. Here's the hourly level. Actually, wait. It's actually the 4-hour level. So this is kind of what I've been looking for. Now, again, this zone here, we're waiting for this to fail. It's been hit 3. Actually, this was its 4th hit. So again, we've hit this one plenty of times. This is not, and the reason I left those one up here is this is not a viable Harry Potter trade setup. I know some people, and every week I get a couple messages from people messaging about, hey, listen, what was the rules for that Harry Potter thing again? Where do I find that? This is not a candidate because if it punches forward, stabilizes, and pulls back, there are sellers sitting right here, just above where we are at 132.52. So it's not necessarily an area you want to mess with. Now, would I take shorts off of this? Yeah, there's probably potential shorts in here, but again, you need to be careful because there will most likely be some buyers just below that one. So timing will kind of matter. And again, on a lower time frame here, I'll put the overlay so we can kind of see it. You're looking at sellers coming in right about this area, and you can see how close we got to that one. So most likely the way to play this one would be if we can get a bit more dollar weakness going into kind of the close of today's market, there is probably some type of a trade set up in here. Now, the pound dollar is one of those ones that does give us a lot of options. And what I mean by option is we have binders, we have call spreads, we also have the knockouts. The knockouts for me make a lot of sense on this one. We've had so much movement. I haven't logged in today to see kind of where they're at, but this is one of those pairs that, again, is a very knockout-based pair because they stay so in touch with kind of where current price is. So, again, some good opportunities on there. I don't have them today. This morning I've been all over the place, but I have not seen where the current brackets are, what the current knockouts are right now. But this has a potential for knockout, opportunities, later on today. And again, it will give you the duration for the rest of the week. But definitely check those out. Moving to the downside. Euro pound. So Euro pound, I don't know. Did we draw this one for you guys? Let me see. That's the 11th. No, it would have been right here's where we were last week. So we got a big push forward right after we met last week. And it was kind of one of those positions that I immediately drew this green box and said, this is a parabolic retracement all over. And we're waiting for a collapse of this red line. Well, we got it. We ended up getting there, the push through the pullback, and it dropped down and literally drove right down to the 90 level. Today, we've also seen somewhat of a collapse, and it's kind of the same story. We've seen European weakness and pound strength, and here's how you trade this one. What did I just tell you guys in the previous thing? What am I looking for here? I'm looking for this to hit and to come back down again, which would be dollar strength, pound weakness. Over here, what are we looking for? We're looking for this to kind of roll over. Now, maybe go a little bit higher, grab these levels, and roll over, which would be yen strength, pound weakness. So pound weakness we're looking for here. Pound weakness we're looking for here. And then all of a sudden, the euro pound, what are we seeing here? We're seeing pound strength driving the euro pound down into a level where there are buyers, and we've had buyers step in previously in the past. So do you guys see how on 3 different charts we're kind of setting up to see a similar story about pound weakness coming into the markets? Does it guarantee that all 3 of these are going to kind of roll and flip? The answer is obviously no, because there are no guarantees in the market. But does it increase our odds a little bit, looking at it on a purely technical level, that 2 of these are getting to areas where we're seeing a reversal, and the third, a reversal to the downside, and then the one when it's in the second position is showing a reversal to the top side. So do you guys see how it kind of is very cool that, again, this is one of the things that I love about currencies, is it goes back and forth, and again, you get these opportunities. So again, for me, I'd be looking probably not at 90. If we get down to this, probably 90-10 range, if you guys can get some type of a good confirmation bounce, maybe a green red green candle formation, be a nice pop out the top side, and again, be a nice little long. Now, euro dollar. Euro dollar is on a tear as well. Now, kind of the same thing we mentioned before. If you guys remember the Harry Potter position, what I talked about. This one ended up coming through, pulling back and basing and grinding this level. Look at this. Front run, and just grind it across there. What did it do? It popped, it stabilized, it gave us the white space underneath. And again, here's a simple trick. This is nothing fancy. This is not an advanced indicator. If you're able to draw a triangle inside of the move, and again, it's it's an ugly triangle. Maybe that's a little bit better of a triangle, right? I'll change it to bright yellow so you guys can see it a little bit better. But if you can draw a triangle inside of the pop above, that's a good way to show that we have a push, a base, and a pullback. And you guys can see what the end result was. Now, we were looking for a short entry off this here, and we ended up not getting it. And this was a telltale sign, hey, listen, get out. But then once we went Harry Potter, what do you need to do? We need to switch it the other way. Whoops, not that one. This way of that basing level. Okay. And what did we do? We punched through, we pulled back, we held, and we drove higher. And there's your 1 to 3, there's your 1 to 5, and pulled all the way up again. And again, where did the reversal happen? 10 o'clock in the morning. it's I hope you guys know how excited I get about this when I see this again. And it happens every day. 10 o'clock, 10 o'clock, 10 o'clock, 10 o'clock. If you have time, can you describe how the front runner works and what it looks like? Sure. Well, absolutely. Again, guys, anytime you want questions, just go ahead and ask them, and if I can cover them. So this is an example right here. We were looking for price to pull into this level, right? And again, one of the things about price action is it's not based off of like support and resistance is if price breaks this line, do this. So as a price action trader, I focus on zones and areas, right? Because there's not just one buy order out there. They're typically in a range. Like if you're buying $1 million, a million share position, you can't put it at one spot because people figure out where it is. You have to kind of tear it around, right? So basically, for me, I'm an if this then that trader. So if price was able, here or even here, if price was able to get back and touch that zone, it was an if this then that trade for me. If price touched it, I was willing to short. Now, what did price do? And again, I'll move this down a little bit, but this is a perfect example. I'll just leave it there. As price was driving up, I was ready to short it, but price turned before I got there, so I got front run. And then it happened again. Price ran up again, and I got front run again. Okay. Price did it again, got front run, and finally I got my entry. Okay. The reason people do this, and think about it, at its most simplest form, say you knew like a gigantic company like Goldman Sachs wanted to buy something at $100, right? Say it's going for 120 right now, but you knew that they wanted to buy 1 million shares of XYZ when it hits $100. Would you put an order in at $100 also, or would you put yours in at $100.25? You would obviously put yours in front, and you would front run their large position. That's kind of what happens here, and it's a big bummer. It's like a big womp, womp, womp when it happens, because you're like, oh, God, I wanted to short it. And what happened? It left the train station without us and kind of went all the way back against us. So it's kind of one of those things. It stinks when it happens to you, but it's just a part of the life. It's just a part of trading. It's what we are trying to do in the markets as well. Like we are trying to front run other buyers and sellers, so our positions get filled first. But that's what I mean. So hopefully that works, William. Hopefully you're able to get enough out of that one. So dollar CAD. Man, dollar CAD, I've been trying to get short this position, and it's just not pulling back and giving me the entry, right? So it's continuing to push lower. Dollar CAD is one of those things that the Canadian economy is, they are an export nation. If you need lumber, you buy it from them. If you need oil, you buy it from them. This is continuing to push lower, and the first time we have buyers coming in is still a decent way away here. It's still about 60, 70 pips away. It's got about 2 days worth of movement. Canada is not necessarily as weak as us. They are not having the same type of COVID issues that we are having. And they are not in the news as far as economic things as much as we are. They don't have trade wars with anybody but the United States, right? And again, that was kind of a last week thing. The aluminum or aluminium, depending on who says it, right? I just say aluminum. I'm probably saying it wrong, but the aluminium is how I guess the English say it. Besides that, we don't hear much out of Canada. In this market right now with the media, no news is good news. So this is the 4 hour. You guys can see here on an hourly. I just was unable to get it. I'll delete it now. I'll take it off just to kind of clear this one up a bit. Just have been unable to get there. So there are some smaller time frame zones that I think you need to watch out for. Right now, I have kind of alerts set down here at 133. Actually, I have mine at 133.35. It's basically right there. And I have another alert sitting over here. I kind of want to see which one gets hit first. I think there will be some movement with this tomorrow if the oil number is a big miss. It will give us some movement, okay? There is some Canadian news later in the week, but I wouldn't say any of it is necessarily, I don't know. I wouldn't say none of it is really necessarily earth shattering, right? I mean, retail sales on Friday morning. Here, I'll bring it across so you guys can see. Right, retail sales right here, right here at 8:30 in the morning. This will definitely move the cat a bit, and there's no U.S. data to kind of contradict it. It's supposed to be great. I mean, going from 18% retail sales up to 24.7%, that should also give us some more strength. Whoops. I have a couple of these windows up, I guess. And that could be the reason why this is continuing to push lower. So I'm kind of hoping that we can get down to this 131.35 and take a small bounce off of it. Ideally, perfect case scenario for me is if we can get to that 31.35 at 10 o'clock in the morning, I'm all over it, right? Or 32.58, I'm all over that as well. So again, I love those 10 o'clock reversals. I think those are huge. And again, I'd love to get into one of them from here. So yen, yen is also another one of those ones. Again, here's current price. It's another one of those ones that we were trying to get a pullback and just haven't gotten it, and it's just continuing to fall, 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 fall. The yen, again, I have an area down here at 105.28 that I've been very cautious with. And again, I guess this one hit a low of 108.27, so I missed it by zero point 0.4 of a pip, so even a little bit of a lower rate. I think this one right now is preparing itself. It's in a similar situation. It's waiting for FOMC. I don't expect this one to continue on the kind of trajectory lower that it has. This one, we did not get the pullback in the short. This is one of those situations where the train left without us. We had a short setup. We were waiting for a pullback, and it just left. It just continued to fall, and it's done nothing but fall since that time. So, you know, not much you can do about that one. Sometimes trades will get away from us. I will say, though, if you guys are familiar with trading the knockouts, this is also a great little knockout position. I really, again, you guys will hear me say this term a lot. I'm sure JK is going to message me eventually and be like, stop calling it the Harry Potter. Knockouts are great for this because even if we don't get that full pullback in, you can set a knockout. And worst case scenario, it does come back and take you out on the top side, but it's a way that you guys can get in with low risk and again, a fixed level of risk that you know how much, worst case scenario, you know what your maximum loss is going to be when you get in. And this is one of those times where this thing just kept going, 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 and going. Again, not particularly talking about the dollar yen, but really any of the knockouts. This is like the Harry Potter trade like this is, it's the perfect setup on that one, guys. And again, it's a continuation breakout of a prior level of buyers or sellers. Just to be clear, what you look for in reversal at 10 a.m. for many of these markets, the key to reversals. Yeah, sure. Frank, so what I typically am looking for, and again, that's why I spend most of my time in these. I'm on the hourly right now, but I like to look for levels of what I would call supply and demand. And again, you can do it with indicators. You can do it with a lot of different things. At 10 o'clock in the morning is when you tend to see most of the kind of reversal patterns. You'll see one trend in the morning from the open till 10:30, and that is the emotional kind of greed, fear, whatever you want to call it. That is the kind of retail traders' emotion from the open. Well, they get into their positions, they're happy about their positions, and then they walk away. And then at 10 o'clock, all of a sudden, everything reverses and goes bad on them. They're like, man, I was making all this money, and then I don't know what happened. It went against me. That's kind of what happens at that 10 to 10. And again, it's not always right at 10 o'clock. Between 10 and 10:30 is typically when you see it. Um, Me personally, I tend to do it off supply and demand, but there are other things you can use as well. You can kind of tweak support and resistance a little bit. You could use a Bollinger Band because, again, that's showing that it is outside of the normal range. There's a lot of different things. You can coincide it with news. If you have a big push up all morning before news comes out, that could also be another way. There's a lot of different things. Again, I should probably just build a class on 10 o'clock reversals and how to play them. I don't have that one, but I have basically everything else but that at this point. But again, great question. Most times, me personally, I'm matching it to supply and demand levels that were formed on the 30-minute time frame. Okay. Okay. Dollar Swiss. So dollar Swiss, man, this thing is just. We're continuing to see Swiss strength, and this is continuing to push lower. For me, though, it just keeps going sideways, 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 and then gives us kind of a burst, and then just goes sideways, sideways, sideways. Dollar Swiss, it has provided some opportunity, but it's been kind of strange. It does nothing, and then it's boom, big movement. And it's been hard to time because it's really anytime we hear any news between the United States and China or, Beirut, anytime that there's anything that is a geopolitical event, is what drags strength in. Now, obviously, dollar weakness plays into this one slightly, and we're seeing dollar weakness for the most part across all kind of pairs right now, and that's probably helping this a little bit. But this is one of those things that, again, if there's anything that's, it could be a peace deal, it could be a non-peace deal, it could be bombings, it could be trade wars, all these different things that, again, are greed or fear-based kind of news releases, they will affect this pair. So this one, I haven't really traded this one much. Again, it's been very choppy, very grindy, nothing really clean in levels that I've liked. Again, this one I was like, we're either going to break the top or the bottom, and whichever one breaks first, that's the direction to go in. And again, we broke the bottom level, and it continued to push down. So had you broken that one, there was the trade that we had talked about with my group the other day, right? And it's kind of the same thing. At this point, we have new levels coming in. I think this level up here, it's going to be something we need to break. And even on the downside, we haven't really started to kind of, we haven't really started to base anything yet. But somewhere in this zone too, where there's probably, maybe, I guess we could probably use that one. I would say, you could use this level here and say, hey, listen, if we, break this lower level, again, kind of in a good spot. Break the top level, probably retracing back up to the 9102. But if you're not a diehard dollar Swiss trader, probably not, you're probably not super excited about this one. Let's go over to gold because everybody loves gold right now. So gold finally got a little bit of a push today, and you can see at what time this morning did gold have a little bit of an issue, right? Gold started basically collapsing. I'll drop it down to a 30-minute. Gold came up into a level right here, and we hit that level and kind of basing around 9:30. Market opened, and what did we do from the 9 to 10:30 time frame? We shot straight down. Okay. When did the bottom get put in, and when did we turn? Right at 10 o'clock in the morning. Okay. So again, this is who asked it, Frank. This is kind of this is where that reversal comes in, right? We get the retail trader reaction to the market, and then it reverses back on them. Okay. This is another example right now. So as far as gold goes, guys, the more we hear about stimulus, anytime anybody big mentions stimulus, or if Warren Buffett mentions gold or anything, or mentions inflation, there's certain key phrases. We are going to see a bounce up in this one. Okay. Now, gold, and again, if we played this game and I said, what's the first word that pops in your head when I say inflation, you're going to say gold. Almost everybody in the channel is going to say gold. Now, gold is actually not a great hedge for inflation. It's a great way to maintain value because it has not lost value over the last 2,000 years, but it actually has not been a hedge for inflation. It's not a great investment as far as making, covering you for inflation goes, right? So gold is one of those things that's a little bit different. I actually have a presentation coming up on I think September 2nd, that I'm actually diving into gold and some of the things that gold does and some of the misconceptions about gold. I would have to say right now, I think gold probably has one more burst in it higher, right? And the reason why I say one more is any type of big stimulus check or anything like that, people are like, oh, printing money, inflation, inflation, inflation. Well, we're printing money right now to avoid a recession or maybe even a depression. I've heard some folks actually say that this could be as bad as like the 29 recession / depression thing. This could be the next one. We don't have inflation when all that stuff is bad. We can actually have deflation, which again is the exact opposite of what people are buying gold for. So I do feel that there is opportunity for this one to go higher. I do think that's there. I do actually have alerts in here set at 2063. But again, on an intraday basis, it's you got to kind of keep your ear to the media. And unfortunately, I hate saying it that way, but that's what it's boiling back into, right? Right now, gold is kind of in no man's land. It had a little bit of a grind, and you can see the pullback. But the way to play gold, in my eyes, lately has been look for those reversals. See what the retail trader wants to do when the market's open. See where they want to drive gold. Are they believing the news? Are they saying we got to buy this? I mean, gold ATM machines, get it right now, guys. Are they believing that hype? And then is there an opportunity for a reversal? And again, the way you find those is drop the lower time frames. You guys can see here. Now, this one didn't quite turn in a level. This one was kind of one of those ones that would have been a little bit harder. But, I can see a level of basing right there. So, with it slamming into this level at, again, if you can see at the bottom, you can see that this is 10 o'clock. This red candle here slams into here at 10, and then 10:30 starts the green, starts this green one right here. Could that have given me an opportunity to get in something like a binary or maybe even a knockout, knowing that am I taking risk? Yes, but I had a big emotional move down into a level where we had buyers and basing. Could I take that little level of risk? Again, it's trading. We take risk in every single trade we take. But could I have gotten, a 1-to-3 risk to reward ratio out of that one? Yeah, you could have. You actually just blasted through your 5. And how long did it take? How long did it take? Well, here's the 10:30 candle. So even at this one, when it came down at 10:30, if I said, okay, we're in the level right now, I'm willing to take this little bit of risk here, that this could be a place that buyers are going to step in. In one candle, you guys can see this one candle came all the way up to here. I don't know if you guys can see it. It's right here. So in less than one candle, your one risk already hit your 3 profit. In 3 candles in less than an hour and a half, you would already hit up. So even if you had done the 10 to 12, that ended right here. You're over your 1-to-3 risk to reward ratio. So again, do your homework, guys. Figure out on a 2-hour binary for gold, or go look at the knockouts. See if this would have made sense today. How many different strikes would this have jumped based off of hitting an area of supply or demand based off of a 10 o'clock reversal? Okay, was there opportunity to place this trade today and make some money off of it? Again, you guys can answer the question for yourself. Okay, but what I'm looking for right now also is I'm looking for kind of a pullback up, a little bit higher. I'm going to be looking for reversals. Again, I probably won't trade it today. Tomorrow morning, there will most likely be a trade, but again, be very cautious tomorrow because FOMC mentioning inflation, it is one of their mandates. It will probably have an effect on gold. So again, make sure that you are protected. If you're in profit, maybe even think about getting yourself out a bit early. Or any position you have on, be okay with the loss if it happens. That's what we can see. Now, silver. Silver actually went off a smaller level here. You can see earlier today. This was a level that we had talked about, 28.60. I mentioned it to my guys. We literally dinged off of it earlier today. That one kicked in at right around 9. Actually, I guess it was actually 10 o'clock. 10 o'clock is there. So yeah, this one had already hit. This one hit a little bit early. It happens. This one cranked all the way down and did kind of the same thing, the same reversal. So it looks very, very similar. I have a short when we have a break in a pullback down to this 25.87 area. I would also like to see silver come lower. I think silver is kind of a secondary proxy for gold. But I think it's got a lot more buyers sitting above. I think gold would be able to get to like all-time high ranges much easier than silver would be. I think silver is kind of a secondary proxy for some big money out there to try to suck some retail traders in. But kind of the same idea. Push a little bit higher. I think there's levels sitting up here. There's a level starting at $28.90, well, basically $29. There's another one up here at $29.40. There's this little minor level that's been respected here as well as here, up at $28.46. So again, a little bit of a push higher again. I think this could be an interesting trade setup for tomorrow. But it did the same thing as gold did. This one's actually probably even a little bit more clear coming off this level. What time did it hit? At the bottom, 10 o'clock is the red one. 10:30 is the green. Okay. Of the two, I will say I do prefer gold over silver. I think that one is a little bit cleaner to trade. But again, same trade setup. Huge drop down, parabolic retracement based off of there's a couple different trade setups, right? Parabolic retracement down, much larger candles than we're used to seeing, into a zone of buyers. Again, 10 o'clock reversal. So parabolic retracement, 10 o'clock reversal, punch back up to 28. Gotta love when multiple things all line up. All right, so last but not least, I got 2 minutes. I'll cover this one as quick as I can. Let's go to oil, everybody's favorite commodity. Let me pull this up on TradingView. Now, oil has really been stuck inside of this kind of sideways channel for a long time. We've seen this, and again, here's our TradingView chart. Nope, I'm not interested in buying that. Back up. I was showing a student a bunch of different things here. So let's go back to an hourly. All right, so this is kind of what we've been dealing with. We've been bouncing forth, and last week we were talking about if we could get just a bit higher. We had a trade set up right here. If we were able to get up into this level here at 42.82, we were getting short. It tagged it just barely and then kind of based and just continued to push away. So it did come down and grab the levels that we had talked about as far as levels that would give us a little bit of an issue. It hit it here and bounced, hit it again and bounced, and then came back up. And guess what? If I extend this across, and I know this gets a little bit weird in here, but I'm extending this across, you guys can see the same trade that we drew last week, what just happened this morning. Okay. So remember, a lot of these areas, they don't go away. They're in there. They're in the system. It doesn't necessarily matter how close we are. This would have been a great little trade setup in short for this morning. Okay. Now, I do think that this level, again, is probably a bit risky to take again. Again, being in the afternoon, the oil markets are kind of drying up. We're not going to see too much movement. But going into tomorrow, it's going to be a big telltale sign if we pull back off this level or we enter oil inventory reports tomorrow at 10:30 around this level. Okay. Me personally, I would love if we can get price to come down, right? I mean, if we can get price to come back into this level in here, kind of this bit right here, not that one, it's this. If I could get price to come into this level by tomorrow morning, I'm all over that one. I would love that. I think that would be an absolutely great setup, coming down to 42 in the overnight, preparing for that oil inventory report. Because again, if they miss again, we will probably have a little bit of a bounce high. But again, I don't think it's going to go much past this unless it's unless in the overnight if we start to push through and blow up the rest of these sellers. So again, same trade from last night. It ended up or from last week. We ended up it ran away from us, ended up triggering this morning, and ended up kind of moving to our full profit target. So above and beyond our profit target, about double what his profit target was. So keep that on your radar. Best way to play oil tomorrow morning is going to be to log in about 9:30. Look to see where the overnight oil movement has occurred. And again, take it off those levels and look for some pre-market moves. And again, binaries or knockouts are be the way to play that one. All right. So guys, with that being said, that is kind of the conclusion of today. Mark your calendars for next week, August 25th. It's 5 days before my birthday. I expect presents. If you guys have any questions about what I said today, you're more than welcome to email me. The way that you do that, and every week I get a couple people asking about Harry Potter, and I don't mind answering questions about it. Again, support@keeptradingsimple.com. The bottom one, though, for email is probably the easiest, but you're more than welcome to check out YouTube channels, Twitch, Discord, Facebook, Instagram, whatever you guys like. And if you wanted to see the classes, it's up there at that bit.ly link at KTS class. All right, with that said, guys, I am out of here. I will catch you guys next week. Thank you so much for joining us, and have a great week trading. All right, guys. So let's see. I'll pull this chart back up again. I forgot to click the button. Let's go ahead and do it real quick. For those of you that are still on, let's go ahead and do the drawing. I will suck it across. Let's see. Actually, you know what, guys? We're not going to do the drawing today. Yeah, I forgot to hit the drawing button before. So for those of you that are still in the channel, what we will do is tomorrow morning, we will do a double giveaway. So instead of 25 pip chips tomorrow morning, we will do a 50 pip chip giveaway. Man, say that out loud. 50 pip chip giveaway. Whew. Man, that's going to be a hard one. I'm making t-shirts on that one. So yeah, tomorrow, 50 pip chip giveaway, guys, to make up for today because I didn't put it in there. So with that said, guys, I'm out of here. I'll catch you tomorrow.